Now, China's currency, the yuan, recently hit a 4.5-year low against the US dollar. And with the policies Beijing has instituted, the yuan is expected to keep weakening. And this would not be good news for Korea, particularly the nation's exporters. Our Kim Min-ji tells us why.
Will the Chinese yuan depreciate even further? According to a Bloomberg survey of 64 foreign investment banks, the yuan is expected to trade at an average of 6.61 against the US dollar at the end of next year, which means on year the Chinese currency is forecast to lose 2.3% of its value. Already last week, the yuan hit its lowest level against the dollar in more than 4 years. This after China announced that it intends to depeg the yuan from the dollar and instead manage the yuan to track a basket of 13 currencies, including the dollar, euro, and yen, which would give the yuan room to fall further against the dollar. Analysts see the move as an attempt to manage the yuan's weakness against the greenback ahead of a widely expected U.S. rate hike this week, as a strengthening dollar in turn would raise the value of the yuan. China has been cutting interest rates to loosen monetary policy and boost its slowing growth. Some analysts warn, however, that the decline in the value of the yuan could trigger competitive devaluations, as other nations could weaken their respective currencies to maintain trade competitiveness. Analysts say Korea, considered one of the most vulnerable to a weak yuan, will likely see slower exports due to weak price competitiveness in areas it competes with China. 김민지, 아리랑 뉴스.